Hello, I'm Jonathan Noyes, Head of Investment Research at Wealth Club, and today I'm with Mark Bennett of Haatch Ventures to talk about the Haatch SEIS fund. Hello Mark, welcome back to the studio. For those who aren't familiar, can you give us some background to Haatch and your own experience?
Sure. Haatch started in 2013, started making digital investments. We launched our first EIS fund back in 2019, and then our first SEIS fund, which we're here to talk about today, back in 2021. So we've been doing SEIS investments for the last couple of years. Regarding my background, I work at Google, been there 9 years, a background in technology across retail, media, and other technology companies like Microsoft. And I bring a set of experiences that complement a very rich team. So our other partners of Scott, Fred, and Simon, we've got a very good background, particularly in e-commerce and digital marketing. And then over the last year, we've complemented the team with a few additional hires just to really kind of richen the experience and the expertise on the team as well.
So we're here to talk about the SEIS fund. What does it aim to do for investors?
It's focused on digital and B2B SaaS, so software startups focusing on business-to-business solutions. In one of our SEIS funds, we look to invest in between 9 and 15 different startup businesses, so that gives a level of diversification for an investor in one of our funds.
And in 2023, we saw some pretty good news for SEIS. The amount you can invest in a SEIS qualifying company has increased to 250,000.
Yeah.
How does that affect the way you invest in the companies you back?
Well, we think it's really good news. We think it's good news for investors. Like the investor limit, I think went from 100 to 200 to invest in SEIS. So that's great to encourage more investors to put money in startups. And then for the companies themselves, it's excellent news. And I think the whole industry is really happy that the government followed through on some of the noises they were giving. They increased the limit of an SEIS investment in a startup company from 150 to 250,000 pounds. For those who know a bit about Haatch, we also have a very deep relationship with British Business Bank. They've put 10 million to co-invest alongside Haatch. And so for every one of those investments we do, they actually put, it's about 60,000 per company. So if you think about that investment now, it's 250 of SEIS money that we can put in, topped up by an extra 60,000 from the BBI fund, which means one of the startups in the portfolio is getting 310,000. What does that mean? Well, it's more money to give them more runway. We like to invest in a business that has 15 to 18 months runway. That allows them to go longer to get to that next big, often fundraising event of like a seed round, or maybe even a Series A, depending on the traction that they've got in their first year and a half. So overall, we think it's a great thing. And obviously for our investors, they individually can put more money, and we can put more money into a startup. That increases our equity stake as well. And that means we have a little bit more influence and a little bit more upside in the business as well. So all in all, we think it's a really good move.
Yeah, very good. And so what are you looking for in the companies you back?
Well, I mentioned B2B SaaS, and over the last year, we've started to really focus our investment criteria much more on this area. It really lends itself to the experience we've got into the team, and we're finding a lot more really interesting, exciting opportunities in that space. So that's kind of the focus of the fund, and the businesses that we've been investing in over the last year really reflect that focus on B2B SaaS.
And how are you sourcing these investments? Because obviously, before you invest, you've got to find these deals.
Part of this is just natural inbound, and the quality of that gets better. The more you build your brand, the more you build your portfolio, the more you're getting recommended by your founders to other people in the community. And that's just the nature of actually kind of being in the business and in the industry. But over the last year, we've got a lot more focused in terms of our outbound engagement and like seeking and finding really interesting founders. It's a competitive market investing in strong founders and strong ideas. So the earlier you get into that, the better. Like often if a business is going out publicly to raise money, it's almost too late. So we've built a number of kind of proprietary techniques within the business to actually seek out like early stage businesses before other seed investment funds do. I can't go into too much detail, but for example, if you see a VP of technology from a big software company like Amazon leave, and then you see them setting up a business on Companies House and doing a share split with another co-founder, they're just some of the indicators that might highlight that something interesting is happening there, and that with a bunch of other indicators would generate interest on our side of like, maybe there's something there that we should reach out and look at, and that's just one of the things that we do to try and find businesses early on. So yeah, there's a number of things that we're doing to be more proactive to really seek out the good investments for our funds.
Very good. And the current economic environment, pretty tough. Is that affecting the way you invest or the companies you back?
Not really the way we invest. I mean, it's interesting because some of the more kind of traditionally late stage funds are probably moving a little bit earlier in and seeking out some of those more seed opportunities. So if anything, it's probably just got a little bit more competitive. For us, like that's I mean, a combination of a few things that I think have worked in our favour. From day one, we have never charged the companies we invest in any fees. So a few other funds could kind of invest in an SEIS investment and then charge the company back like 10% or 10 grand. We've never ever done that, and that's actually we think it's really good for the companies themselves because they get all the money to build their business. But it's also helped us really win a lot more deals and generate like a brand and a reputation within that space as well. So that combined with just the due diligence we do with the company, we obviously get to know the business, get to know the founders. We have a network. We try and help pull the round together, and all those things I think add up to help us win more of the investment opportunities that we're really excited about. And then, like I mentioned some of the other founders, I mentioned the other team, like that there's a genuine passion to help founders succeed. We're a group of operators, entrepreneurs, some of us working in bigger technology companies. So like the combination, I think, of that skill set and that passion and that engagement is I think it really comes across when you're meeting a founder as well. So we put a lot of effort into our portfolio companies, and we encourage them to go and talk to anyone else in our portfolio to just go and do due diligence on us. And so like that competitive theme is really strong in winning the best investments.
So could you give us some examples of recent deals?
Yeah, sure. There's a couple recent, like this year. There's a business called Made for Intent, which is got some really interesting technology to track real-time intent for someone when they're on an e-commerce site. We met David, their co-founder, January this year. I think they only launched in February. We invested in March, and ARR has gone from nothing. They were pre-revenue when we got involved to 550,000 a year, and they're generating really good momentum and look like there'll be another raise and a value uplift at some point soon. Another business that we invested in really recently, I think it was July this year, is a digital payments remittance business called Bilrs. Rupert, the founder, deep experience in digital payments and digital content as well, and we just got involved in the summer. They've just struck another deal with a big Middle East telecom company, and set up payment channels for individuals to pay domestic bills in other markets like overseas markets like South Asia Frontier. I think they're just expanding into LATAM as well. So they're the kind of digital like B2B SaaS solution companies we really like investing in. And there's a couple of good examples that are just added to the portfolio.
So if we turn to some of the more established holdings in the portfolio, any good examples there of companies you've held for a couple of years now?
There's 3 or 4 that come to mind. A business that does digital receipts for businesses called Slip. They've just signed a deal with JDA Group, a retail group, for 200 stores. I think there looks like there's a seed round coming soon, so there's no value uplift on that one. Another business, Streamkap, which is a database software solutions company. They just raised a round for $2.5 million. That was a valuation uplift for us of 2.6 times, and we only invested in them about 12 months ago. So a good value uplift on Streamkap. Another business would be Volume.
Yeah.
They recently did a 1.5 million sterling round. We invested in them about 18 months ago, but again, pretty good valuation uplift already for us, 1.6 times. We kind of love a business that's doing that already in the first year and a half. So there's a few. Another great one that Denturly, which is one of our earliest ones actually. A couple of years ago, they've just done another round, a 2 million round. I think our valuation uplift there is 6.67. So really great momentum for an early stage business. They're in digital dental solutions. If you're
very good.
Ever near
I've recently had a root canal actually.
Yeah, I don't know if they do that, but yeah. So there's a few examples of businesses that are in that SEIS kind of window. Like we've only been in SEIS for a couple of years, that are showing really good momentum. But we're really pleased, like across the portfolio, how many businesses are starting well. So
to what extent do you get involved in some of these companies? Because obviously, founding team of Haatch looks pretty strong. As an entrepreneur, are you getting access to that team? To what extent are you helping these companies?
We do get very involved, yes. I mean, some startups don't want our help, despite your complimentary reference to our skills and expertise. Some are just like, we just want to get on, do it, and we just check in like every 3 months or every 6 months and see if there's anything we can do to help. Many of the companies we get deeply involved in. One of the team will kind of work with every portfolio company to some level of extent, and we do a lot of prioritization and stack ranking of our portfolio companies, so we can make sure that we give them the right level of support. I personally work with about 6 or 7 of the portfolio companies, and work either board observer or sit on the board of them. So yeah, it varies by company depending on what stage they're at. As the further they go on in terms of their maturity and their fundraisers, and if they're getting bigger later stage investors on board, there's less that we do. We're really helping them get into that growth phase of getting from zero to the first 2 or 3 million of annual revenue. So yeah, like every one of the companies we support, and we get to know them quite well.
Now, you started the SEIS fund in 2021, so it's probably too early for this question, but any exits or signs of exits in the portfolio?
No exits yet, and that's as we'd expect. You want these businesses to be in the portfolio 3, 4, 5 years, kind of minimum, really. So no exits as yet for any of the SEIS companies. 2023 has been a bit of a strange year for lots of macro reasons. Our sense is that there'll be more liquidity coming into the market next year. Businesses will start getting more, again, I guess, acquisitive of like bringing in technology, bringing in startups, expanding their own suite of services. So our gut feel that 2024 looks like it could be really quite an interesting year for us. So like we'll see what happens next year.
Yeah, very good. And risks. How risky is it investing in SEIS? For every 10 companies you back at SEIS, how many are you expecting to fail?
Well, I think if we look at the overall all Haatch investments that we've made over the last 10 years, less than 10% have failed. So actually our failure rate is very low compared to a lot of industry averages, and there's plenty of stuff out there, particularly around really early stage. I mean, these are early stage businesses, and many of these businesses, we are getting to know founders and investing, not necessarily revenue. It can be pre-revenue, MVP, and that might be the point where we need to get involved. They're competitive markets where people are trying to solve big problems and up against lots of other things. So there's plenty of risk with these early stage businesses, but we work hard from a portfolio perspective to give a level of diversification across a number of different businesses. I mentioned 9 to 15 earlier on. And then we really focus on like 1 or 2 of those businesses being able to perform and kind of return the fund as well. So the failure rate at the moment is very low. There will be. We fully expect there to be more failures going forward, but we think that diversity of the fund gives some level of kind of reassurance to investors as well.
So finally, to sum up, Mark, for those that want to invest in a SEIS fund this year, why should they invest with Haatch?
Haatch is the team is a very strong mix of operational and entrepreneurial founders, and that level of expertise is pretty critical. I think to find the right opportunities, build the connections, and win those investment opportunities. Coupled with that, as I mentioned earlier on, we don't charge any kind of investment fees to the companies. Also, there's no hidden fees for investors as well. So that's enabled us to find the quality startups, and I think that's what investors are looking for. They're looking for businesses that are going to go on and really succeed. I think a good tip for Haatch is really the partnership we've got with British BBI and British Business Bank, and their 10 million allocation to support us and co-invest with us. We're really proud of that relationship. We're really proud of that partnership. So I think they're all good reasons. And then we as a team, we invest in every fund as well. So we're putting our own money into these businesses as well. So that combination of expertise, of the way that we go about and work with founders, our partnership with BBI, and our own passion and commitment investment. I hope that goes some way to influence people that Haatch is a great option for people's SEIS money.
Very good. Mark Bennett of Haatch Ventures, thank you very much.
Thanks, Jonathan.
If you're watching on YouTube, please press like and subscribe to the channel for more.